Hello everyone, welcome to the market opening bell on Thursday, July 31st, your 10-minute guide to the stock market. The US and China concluded a new round of trade talks. Hong Kong stocks fell on the last trading day for futures. The Seng Index opened 189 points lower, with the decline narrowing to 24 points at a high of 25,499 in the morning session. After HSBC and Hang Seng Bank announced their results in the afternoon, the market's losses widened, with the Hang Seng Index falling as much as 442 points to a low of 25,082, closing down 347 points or 1.4% at 25,176. The H-share index dropped 107 points or 1.2% to 9,038, and the Hang Seng Tech Index fell 153 points or 2.7% to 5,490. Total market turnover was 319.6 billion Hong Kong dollars. Southbound funds net bought 117.14 billion Hong Kong dollars in Hong Kong stocks, including net purchases, Li Auto totaling 2.093 billion. CSBC Pharmaceutical 872 million, Meituan 447 million, Alibaba 357 million, Tencent Holdings 183 million, Legend Star 175 million, WuXi Biologics 171 million, Xiaomi 148 million. Net sales SMIC 205 million, Innovent Biologics 121 million. Statistics show southbound funds have net bought Tencent for 5 consecutive days, totaling $2.272 billion, and Alibaba for 4 consecutive days, totaling $1.63 billion. Technically, the Hang Seng Index finally filled the upward gap from July 23rd between 25,130 and 25,228, closing below the 10-day moving average at 25,230 and dropping as low as 25,082 near the 25,000 level. If the 10-day moving average is confirmed lost, it may test the 25,000 support level. Below 25,000, there remains an unfilled 19-point upward gap between 24,826 and 24,845. Mainland Chinese markets rose and then fell back with increased trading volume. The Shanghai Composite Index peaked at 3,636, closing at 3,615, up 6 points or 0.2%. The Shenzhen Component Index hit 11,307 but closed at 11,203, down 86 points or 0.8%. The Chinex Index fell 39 points or 1.6% to 2,367. Combined turnover in Shanghai and Shenzhen was 1.844 trillion yuan, up 41.1 billion yuan from the previous day. The renminbi US dollar central parity rate rose 70 pips to 7.1441. On the Hong Kong stock market, Li Auto launched its first family-oriented 6-seater pure electric SUV, the Li i8, with a starting retail price of 321,800 yuan, matching its L8 extended range electric vehicle, though the premium version is about 10,000 yuan more expensive. Higher battery costs for the i8 may impact high profit margins, leading to a 12.8% share price drop to 104.5 Hong Kong dollars, making it the worst performing blue chip stock. Other auto stocks also fell, with NIO, XPeng, and BYD down over 5%. NIO is set to launch its new pure electric model, Onvo L90, with pricing likely similar to the i8, with competitors like Huawei's iTo and Tesla launching similar models. The 6 to 7-seater pure electric vehicle market is expected to become increasingly competitive in the coming months. Tesla reportedly signed a battery order with South Korea's LG Energy Solution, impacting CATL, which fell 7.7%. On the earnings front, HSBC reported a midterm pre-tax profit of $15.81 billion, down 26.7% year-on-year, in line with expectations. Basic earnings per share were 65 US cents. The board approved a second interim dividend of 10 US cents per share, flat year-on-year, and proposed a share buyback of up to $3 billion at the upper end of expectations to be completed before Q3 results. While HSBC's results met expectations, it warned that worsening macroeconomic conditions could prevent ROTE targets from being met in coming years. Additionally, its Swiss private bank is under investigation by Swiss and French authorities for alleged money laundering, still in early stages with potential significant impacts. Though specifics are unpredictable, the share price fell 3.8% to 96.95 Hong Kong dollars. Hang Seng Bank reported weaker than expected midterm results with pre-tax profit of 8.097 billion Hong Kong dollars, down 28.39% year-on-year, and shareholder profit of 6.88 billion dollars, down 30.46%. It recorded credit losses of 4.861 billion dollars in first half, including $2.54 billion from Hong Kong commercial real estate, with the non-performing loan ratio rising to 6.69%. If the economic environment doesn't improve, higher provisions may be needed in second half. The share price fell 7.4% to $113.8. CATL announced midterm results for the 6 months ending June after market close, with revenue 178.8 billion yuan, up 7.3% year-on-year, driven by sustained demand for power batteries. Net profit was 30.512 billion yuan, up 33% with earnings per share of 6.92 yuan. Overall gross margin was 25.02%, up 1.57 percentage points. Power battery gross margin was 22.41%, down 1.07 percentage points, while energy storage battery gross margin was 25.52%, up 1.11 percentage points. An interim dividend of 10.07 yuan per 10 shares was declared. New Oriental reported Q4 ended May net revenue up 2.4% year-on-year to 1.243 billion yuan, but net profit fell 73.7% to 7.1 million yuan. Non-GAAP net profit was 98.083 million yuan, up 59.4% year-on-year. Looking ahead, New Oriental expects Q1 2026 ending August net revenue of 1.464 to 1.507 billion yuan, up 2 to 5% year-on-year, and full year 2026 net revenue of 5.145 to 5.39 billion yuan, up 5 to 10% year-on-year. Companies announcing results today include Standard Chartered, Hong Kong Telecom, and Auto Home. Standard Chartered's 2025 midterm pre-tax profit is estimated at 3.621 to $4.214 billion, up 3.7% to 20.7% from $3.492 billion in 2024, driven by strong demand for global cross-border asset allocation, wealth solutions, global markets, and global banking. Mid-term underlying revenue is expected to be 10.443 to 10.906 billion up 4.9 to 9.5% from 9.958 billion last year. US President Trump posted on Truth Social reiterating that the deadline for imposing reciprocal tariffs on multiple countries is August 1st, emphasizing that the deadline will not be extended. The Federal Reserve kept interest rates unchanged, with Chair Powell indicating that the Fed is not yet ready to cut rates and is assessing the impact of Trump's tariff hikes on inflation. US stock rose initially but later fell. The S&P 500 rose up to 0.4% intraday, but closed down 7 points or 0.1% at 6,362 points after the Fed's decision. The Dow Jones Industrial Average rose 0.2% at 1 point, but fell over 300 points, closing down 171 points or 0.4% at 44,461 points. The Nasdaq Composite Index edged up 31 points or 0.1%, closing at 21,129 points. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, fell 137 points or 1.8% at close, ending at 7,413 points. Tech stocks show mixed performance, with Nvidia up over 2% and Apple down 1%. Meta announced its earnings after the market closed. Q2 earnings per share were $7.14, well above the expected $5.9, with revenue of $475.2 billion, surpassing the forecast of $448 billion. Daily active users grew 6% year-over-year to 3.48 billion, beating expectations. Advertising revenue was $465.6 billion, above the expected $440 billion. Reality Labs sales were $370 million, with an operating loss of $4.53 billion, better than anticipated. Meta projected Q3 revenue between $475 billion and $505 billion, above the expected $461 billion, and capital expenditure between $66 billion and $72 billion. Its stocks surged 12% after hours. Microsoft reported a 24% year-over-year increase in net profit for its fiscal Q4 ending June, reaching $27.2 billion, with adjusted earnings per share of $3.65, beating the expected $3.37. Revenue rose 18% to $76.4 billion, also exceeding expectations. Its stock rose over 6% after hours. Arm reported a 12% revenue increase in its first fiscal quarter to $1.05 billion, with earnings per share of 35 cents, meeting expectations. For Q2, Arm projected earnings per share of 29 to 37 cents compared to the expected 35 cents, and revenue of $1.01 billion to $1.11 billion against the prior forecast of $1.06 billion. Its stock fell 8% after hours. US Q2 GDP grew at an annualized rate of 3%, rebounding from a 0.5% contraction in Q1, surpassing the expected 2.4% growth. The expansion was driven by a 30.3% plunge in imports. Consumer spending rose 1.4%, government spending rebounded 0.4%, offsetting a 0.4% slowdown in fixed investment. Exports fell 1.8%, the largest drop since Q2 2023, compared to a 0.4% increase in Q1. According to ADP, U.S. private sector jobs grew by 104,000 in July, the strongest gain since March, exceeding the expected 75,000 and rebounding from a revised 23,000 job loss in June, signaling a recovery in labor market momentum. Our stock pick today is Ali Health, stock code 241. Ali Health operates primarily in two major areas: pharmaceutical e-commerce and healthcare and digital services. The pharmaceutical e-commerce business includes the Tmall health platform and self-operated pharmaceutical businesses, while the healthcare and digital services business encompasses healthcare services and digital tracking services. The Tmall Health Platform, a leading online pharmaceutical and healthcare product service platform in China, has seen continuous growth in annual GMV and active users. As of March 31st, 2025, the number of active merchants on the platform surged 35% year-on-year to 48,300, with online SKUs increasing over 91% to 133 million. The integration of advertising services Securities has further enhanced the business model's completeness for the Tmall Health platform, enabling the group to provide more customized services to merchants while actively promoting the business growth, improving merchant experience and satisfaction, and achieving rapid year-on-year revenue growth. The self-operated business focuses on providing comprehensive and inclusive pharmaceutical and healthcare services, including prescription drugs, over-the-counter OTC drugs, health supplements, medical devices, and contact lenses to consumers from platforms such as Tmall, Taobao, Alipay, and Ele.me. For the year ended March 31st, 2025, the self-operated pharmaceutical business recorded revenue of 26.124 billion yuan, up 10% year-on-year. The number of annual active consumers and ARPU for the online self-operated store continued to grow, with SKUs increasing 33.6% year-on-year to 1.23 million. In the healthcare and digital services business, the group continues to enhance the professional healthcare service experience, offering an integrated online and offline healthcare system through channels such as Tmall, Taobao, Alipay, Amap, DingTalk, Flash Hippo, and Quack services, including traditional Chinese medicine, physical examinations, consultations, appointment registrations, vaccinations, dental care, mental health, vision care, and nursing. As of March 31st, 2025, the number of licensed physicians, pharmacists, and nutritionists contracted to provide online health consultation services grew to nearly 240,000. The group's internal hospital business continues to the group's internet hospital business continues to operate digital solutions for various disciplines, successfully expanding from oncology and autoimmune specialties to neurosurgery, orthopedics, psychiatry, and gynecology. Xiaolu TCM saw its registered TCM practitioners grow to 140,000, with 137 dispensing centers established. Additionally, an AI-assisted TCM diagnostic system was launched, fully integrated with the DeepSeek reasoning model on the Alibaba Cloud Bailian platform, leveraging millions of clinical case data for improved efficiency in scenarios such as physician-assisted consultations. On March 19, 2025, the National Healthcare Security Administration, Ministry of Human Resources and Social Security, National Health Commission, and National Medical Products Administration jointly issued a notice on strengthening the collection and application of drug tracking codes in healthcare and work-related injury insurance. This initiative promotes full process drug tracking through drug tracking codes covering production, distribution, and usage stages, and encourages comprehensive collection and application in healthcare and work-related injury insurance, ultimately achieving full coverage of tracking code collection in medical institutions. The group's Ma Shang Fang Xin tracking platform actively responds to national policy support, further advancing full value chain coverage for drug production, distribution, retail pharmacies, and medical institutions, maintaining efficient and healthy development of its platform business. Recommended buy price 4.85 Hong Kong dollars, target price $5.35, stop loss $4.65. I do not hold the above mentioned stock.